All right. So good evening, traders. Good evening, everybody. Let's do a beautiful audio visual check. Can you hear and see everything okay? While you guys reply to that, I'll get everything ready on my end. Let's get everything set up. Audio looks good. Audio's good. Video's good. All right. Well, let's get started. Good evening, everybody. Welcome to Slow Markets. I'm Coach Dakota, Coach DBA. In our YouTube chat, as always, there's our Topstep risk disclosure. Yeah, I see you guys talking about it already. This is not a signals class. So everything I say and talk about, and if I do place any trades, we all have our own agency. You buy and sell at your own risk. So that being said, let's just jump into it. We're going to go through the rapid fire as always, then jump into gold at 8 p.m. Central. And then we'll talk about some strategy, some slow market trades, and then finish it off with some trader statistics. And that being said, for the trader statistics, if you would like me to review your statistics, I'm going to go ahead and pin the Topstep Discord and then my channel there in the YouTube chat. You know how to do it. Over in TopstepX, you just click on the performance stats, go over, right click on share, and then copy that link. But let's dive into it. What a freaking market. I don't have any words for this market. Everyone knows that, I've been a bull. I am a bull for the longer term. And as of yesterday, I was looking for some type of a pullback. We didn't get it. And here's the daily chart on the Nasdaq. You guys could see we had that huge rally off the bottom, sideways, another big rally, a little bit of sideways, another big rally, some sideways. And then today, it was just more of the same. I was, halfway expecting and looking for the market to show some signs of resistance right here at this major daily support and resistance zone. We didn't. We just kind of blew through that, pretended it was not there. And now we're already trading, 19,800s, 860s. Andrew says 8 consecutive green candles in a row. And these candles aren't small either. Like if we look back in the past where we've had nice long extended rallies before, like, when we were hitting all-time highs where it was just rally after rally after rally. We're covering that in almost a day. Like these are big moves. Like these are not just little small winning days. These are really, really big moves. Last time we seen anything similar was back in November, right? We still didn't. Was that 3, 6, 7, 8? There's 8 winning days in a row, and then we had a little bit of a pullback and then continued. And so if we're trying to find anything in comparison for what we're witnessing, like where did we see anything like that? Was it November's? We're already kind of past that in November, and we kind of just really have to go back to see if we've seen any rally similar to this. We have, but it's taken a lot longer than just 8 days. So this has been a very rapid, 8 days. What are we at from the bottom? 17,300, and we're almost to 20,000. So 8 days, 2,500 points is just insane. And that being said, as much as a bull that I am, as much as someone who just loves to buy the market, I have a hard time just buying this. Like, where do we buy this? And I know we go through, and I've been on Topstep TV, and I joke about it when I'm talking to Hogue and Andy. It's like, where do we buy? Where do we buy? This is just something else where there's been very little, if any, opportunity to buy it. Given if you're day trading and you're looking and you start to zoom into an hourly chart, and on an hourly chart, you can make an argument to buy these little pullbacks and buy these dips. But as we are trading after that dip occurs, there's really not been any opportunities unless it's back to what we were, right? Where you just close your eyes and buy, just buy the market. If it keeps going higher, just buy more and buy more. And sure enough, today it was more of the same. And if we look back, the throughout this rally, there really has not been any pullbacks or opportunities. We blew through this. I mean, obviously with hindsight, that's a very clear and good looking bullish flagging pattern. We broke out of that. And then we look over here to the left, the next spot I'm really seeing for possible resistance is, I mean, we obviously have this 20,000 level, right? This is something I was looking at. I know, I don't want to say I know we're going to hit it, but the odds of us getting to 20,000 were pretty likely given the type of market we were in. But I was expecting some type of a pullback in terms of the consolidation and, pullback, maybe just one red day. But no, I mean, it's sure as heck been just, maybe we get to 20,000 before morning. I'm going to be on TopstepTV Fast Markets with my buddy Rips. And, maybe before I even get on air tomorrow morning, we're already trading at 20,000. I would love to see a pullback. At least maybe we could get a pullback down to some type of support. Maybe we could get a pullback down to 19,700. So that way we could find an opportunity to get in long and have the confidence that, hey, we're at some type of support, because we haven't really had much of that lately in the Nasdaq. And then 8 straight days. If you are one of those traders who look at that type of a statistic where it's kind of like roulette, how many times will it land on red? How many times will it land on black? And I think we're kind of there where there's a lot of traders who are, in a similar mindset. And I think I've heard it on the news a few times. When you look at the daily chart, how many days in a row can we possibly go green? Well, we're already starting off today at green. We are technically, this is now into the 9th day and we are currently green. I also like tomorrow at the end of the day, I sometimes just get a feeling that the headline on CNBC is going to be like Nasdaq snaps 8-day winning streak. And that's what I start thinking about when traders start saying, hey, we're 8 days in a row, or 7 days in a row, 8 days in a row. And then you just know the very next headline is going to be, Nasdaq snaps 8-day winning streak. And then it just snaps it by we end the day negative 10 points, like 0.25%, nothing big. So I'm hands off on the Nasdaq when it comes to buying it. I do not want to buy this market right now in this type of a condition. I would rather be patient and wait for a pullback. Now, that being said, if we do just break and just keep going straight up, so be it. I missed out. It did not give me an opportunity. I'm going to wait. I'm going to wait for a pullback and then look for areas to buy it. Until then, I mean, dare I even say it, I'm kind of tempted to just throw 5 micros short and hold those overnight with a relatively loose stop loss and see if I could catch some type of a sell-off in this market. And even that is hard to say, because where would you put your stop loss, right? So I was thinking about this. If we do keep pushing up, then maybe there's a reason to just short 20,000 and then have a little bit of a wide stop loss and just hold it to the end of the day. I'm not sure. There's not really much to talk about in terms of the Nasdaq. And there was this gap. Now, I want to highlight this gap that maybe it's coming into play. You can see it right here. So this happened on, July, what was this, the 23rd? We had this gap, so maybe that will come into play. We're showing a little bit of resistance here at 880s. We're kind of just hesitating throughout most of the slow market around this level. But yeah, that's just not really much. I mean, if you want, in my personal account, I've been selling call options. I mean, the market's been going up and up and up. And so I have been more bearish in my positions the last 2 days, last 24 hours, basically, about selling calls, waiting for this market to pull back. And if not, so be it. I missed that long run. Until then, I'm going to wait. I'm going to be patient. And maybe I even put a sell limit order somewhere up near these highs of 957 or even 20,000 to see if between now and the London session, and like very similar to what we did, over here. I think it was Thursday where we could put a sell limit order overnight. If we do get up there, great. You get a short and then have a decent stop loss and then have that run overnight. And it worked out really, really well on Thursday. And I think we're really close to a similar situation where we're overextended. We could look for another pullback. I don't know. We'll see. I think hands off and just not trading is probably the best option in this type of a market in the Nasdaq. Okay, moving on. Let's take a look at crude oil. Crude oil is selling off. We didn't get a pullback. I was hoping to get maybe even a deeper pullback to short this market. The next area that I am seeing crude get to is going to be 72. We already hit 73.50s. We hit it really quick. We didn't get the pullback. I would have really liked to pull back up towards 76.50 or 77, but the market had other plans. We just dumped. We sold through. Next level is going to be these 72s that we very well could test as soon as tomorrow at the way that this has been running. And sure enough, it's been selling off since basically the start of July, and I don't see any different. And looking from a longer standpoint in crude, yeah, I definitely could see, let me get this fixed and adjusted. If we continue to break down, if we break, maybe we test 72, the next level can be these 68s. Like these 68s can be a magnet, as we could see. That's where it was last year, and during the summer is $68 a barrel. So could we see that? Sure. I wouldn't be surprised. I wish we could see that in my gas tank and at the gas pump. But until then, almost the opposite of Nasdaq, right? Where we want to go with the trend, but in order for us to go with the trend, we need a pullback in order to get in. We didn't get much of a pullback in crude. Maybe we would have been able to take a breakout trade, a breakdown below 74.50, and I think maybe is the same situation as we were in last night, where I'm looking for a pullback, some type of a rally, fade the rally, look for a short and a continuation to the downside. I'm not really seeing much set up in crude. Let's take a look at gold. Let's take a look at Nikkei. We'll take a look at Nikkei, the Japanese market, and then we'll take a look at gold. The Nikkei on the 1 hour, it's actually looking a lot more bearish. It's a lot more bearish than the Nasdaq from the overall standpoint, because we've had this, and I know it's really zoomed out, so bear with me. This huge sell-off, and at least on the Nikkei, there's an argument to be made that this is a key support and resistance zone. It's a big zone, depending on where you're looking at it. So maybe we could see some type of a deeper pullback here on the Nikkei, maybe back down into this 37,400s. And as we start to zoom in at the way that we're going now, we are starting to see a little bit of a sell-off this past hour. So maybe I see that, Nikkei do a little bit is maybe we could kind of be range bound in a channel. Maybe we come back down, test the bottom of this channel, maybe even make it down to 37,000. But yeah, I'm not really looking to the long side on either the Nasdaq or the Nikkei, just because we've been, very overextended. Now we'll take a look at gold. Oh, yeah, gold was that. We had a beautiful gold trade today during the New York session. Hogue called it out. It was a beautiful double bottom. It was a beautiful trade. Unfortunately, we did not trade it. Essentially, we had this huge rally. We broke out all the way to the 25.50 that we were talking about. We sold off. We sold off right down to, it looks like there was some support here. It became support again, 25.25. We rallied up, and it's actually looking pretty dang bullish. It's looking really bullish tonight, actually, if I may say so, where this could be a shoulder, a head, and then another shoulder. And so if we do break out of this nice, resistance zone, could we see a run up? I have been looking at this 2600. It's still a ways up there, but yeah, maybe we see another rally. I would love to see a break, and it looks as bullish as I think it could get from the way that I'm viewing it from a technical standpoint if we break to the long side. That's actually looking really good to play for the break for the long side. That's something, we still have 15 minutes. I went through that really quick. There wasn't really much going on in the markets. I'll get back to gold because we're going to be talking about gold at 8 p.m. Central, see if there's a trade opportunity. But let's get to some questions. I'm going to run through some of these other markets, see if there's anything really happening. Do I even say that the Nasdaq is having a little bit of a sell-off? That's not really a sell-off, right? We're just kind of consolidating up here. But let's get to some questions. Maybe there's something that I missed, maybe something that you guys want to have a conversation about in the next 10 minutes. Crude oil might be making such a double bottom now. If crude does make a double bottom, then yeah, I would love to see a pullback in crude to find an opportunity to get into a short. Let's see. I'm just going through some of your guys' questions, so give me just a moment. When will you start teaching us the 100 tick chart? How about this week? Let's just start, maybe we start tomorrow. Let's do a poll. I want to see if we could get above 60%. I'll talk more in depth about a 100 tick chart. Let's do it. 100 tick chart. There you go. Starting a poll. Let's see. Because I could spend some time talking about the 100 tick. It would probably take up an entire session. So what I could do is I could break it down throughout 3 or 4 sessions. For everyone who's joining me after the gold trade, maybe I could talk about the 100 tick chart, and then we could do the statistics, because that's a nice 15 to 30 minute window. I could talk about whatever you guys want me to talk about, and hopefully help you guys out. A double bottom in crude oil. I do see what you see. This is a 5-minute chart. Let's look at the hourly chart. Okay, I understand it. I actually do like this. So everyone knows who's joined my class about how crude likes to run liquidity. So the question is, was this a liquidity run, a lower low, and then do we just rally off this? That this could be it. Like maybe we're seeing that right here, right now, because I do know that, crude oil, before it rallies up, a lot of times it likes to have these nice liquidity runs. As you can see, here's a good example, right? Where we had that low, we made a lower low, and we had a nice rally. And so a lot of these rallies have came from that. If we want to go back in time, and it just depends on the situation, but that very well could be it, because there hasn't been too many lately. That's a 5-minute chart. Usually I'm looking at the hourly chart. Let's see. So here's the hourly chart, and so let me show you this, right? So we had this one, and you could go back through, and time again, I do notice crude tends to do that. We are on a downtrend, so I would be myself a little bit hesitant, even though I would expect a pullback, but I would like to short the pullback, right? Like if we do have a nice rally, I would be looking for a short rather than trying to just buy that, even though it's still a valid trade. The way that I trade, it's still valid, and I wouldn't mind it as well, because it's a really good risk reward. For example, if you're getting long, say right here, right now, then that gives you an option to have a stop loss, say at 73.24, and then maybe you have a take profit up here around. Let's do this. Let's do horizontal lines. Let's say you get in right now. This is just an example, and let's say you get the stop loss below that low, and then a take profit, say right before it starts to get to resistance. The risk reward is good, right? Because you're risking about 25 ticks, give or take, to make $1, right? So it's about, did I do that right? Yeah. a 4-to-1 risk reward, right? So there is a really good risk reward. However, the odds are unlikely. The probabilities are against you because you are going against the trend. However, with such a high risk reward, and as you guys see when I review trader statistics, traders with a high risk reward does not have to win their trades very often. I dare even say 30%. If you're correct on this type of a trade 30% of the time, you would still be profitable because you're going for, you know, a really good risk reward. That's just an example. Do you have a recorded playlist of when you covered your trading system a few weeks ago? Nick Skills, I am still working on that. I've had so much going on with TopstepTV, slow markets, everything, and I haven't taken that time to record that. You can go through and watch the slow markets, and it's usually, and it was to the end of slow markets. It's nice because it's all on YouTube and it's all recorded. However, I will be doing a recording breakdown. As soon as I get some time, I will go through it. Yeah, it's just a lot. It really is. It is a lot to go through. Trust me, it is. What do we have? 9 more minutes. Let's go ahead and focus on gold. Let's focus on gold. Hey, Coach, what do you think is more beneficial, a 50K account or a 100K account? My recommendation would be a 50, just because if you are new and you're not, 100% comfortable, then yeah, it's a lot easier, in my opinion, to get used to a smaller account before going. And it depends on what your risk appetite is. So this is the nice resistance zone that I'm seeing right here around 25.45. You can see it's very clear, and you can see there's a lot of support in this, right? And yeah, it's just how do we want to draw this out? Maybe something like that would be a lot more clear. But I would love to see gold break out. I want to get into a long when we break out to the long side, because we could just have what do we call it? Blow the top off. We could just blow through this and catch a really nice rally here. The question is, how would we get in, right? We could sell off. Every single time we've gotten into this, we've had a nice sell off. So immediately what I am thinking right now, and I'm going to be walking through this just in my head, right? I'm going to be thinking out loud, for example, is number one, maybe we just hang around this 25.44 and then I get triggered in as we break out. So maybe I'm getting in long around 25.45.8. So maybe I'm getting in long on the breakout. So that's option number one. Maybe I even say a breakout of somewhere even lower, and then I could maybe add another contract if we break out from the second level. So for example, we break out of this early pivot. Let me get rid of this one. So maybe we break out of 25.45 and then I get into a second contract. So that is one option I'm thinking of. The second one would be a reversal. The second one would be a sell-off. And if we do get a sell-off, maybe I look for a reversal long down here to around the 25.42s. So let's watch and see this. And then someone says, wait for the overreaction. That waiting for the overreaction, waiting for the initial move has been the play in gold, it seems like, for the past week or so. So let's watch, let's see in. I'm going to go ahead and zoom into a 1 minute, and we'll do our normal journaling. We have 6 minutes till 8 p.m. and see what we could do. We'll do the normal journaling and go from there. We'll see if we get a trade. The last couple days, we have not really traded it. So let's see. Let's watch it. Immediately, yeah, this 25.45. There can be an argument to be made, this 44.6, 44.5 to be a level of resistance that we could look for a breakout. 44.5. And I'm going to only look for trades to the long side, and it's purely based off the technical analysis from the higher time frame. Let's take a look. Yeah, let's see. Do we just get in long on the break, or do we wait for a pullback? Yeah, I always trade the Asian session. The Asian session is my favorite time to trade. This is different than my regular slow markets trading. This is purely a short-term scalp or a shorter trade that we are watching this gold trade at 8 p.m. Central. But typically, I do trade the slow markets where I place orders, and then I hold them between now and the New York session. So after this gold trade, I'll talk more about the slow markets. We'll see if there's any setups, and then we will jump into some trader statistics, and then some Q&A, answer some questions. What do we have? We still have 4 more minutes. 4 more minutes. What time is the Asian session? I usually start streaming, and I basically, as soon as I start this class, is where I like to trade. Whether it's 8 p.m. Central, 7 p.m. Central, it just depends. 8 p.m. we get a nice little spike of volatility. 7 p.m. there's also another spike in volatility, like we're going to see right here. But the next day open, it opens at 5 p.m. Central. That is when the futures markets open again. And then the Asian session, I think it's like what? 7 p.m. Central. Nice. Nothing's really happened. Oh, we still have 3 minutes anyway. We'll see. The gold has not been great to us lately. It has not been breaking out, breaking down. It's been really whipsawed and chopping people up lately at 8 p.m. 25.43 is the pullback buy. So, all right. So it looks like tomorrow and the next day I will be going over the 100 tick chart. And let's do one more. Long or short gold? Let's see what you guys are going to say to that one. Okay, so I will be going over the 100 tick chart tomorrow and the next day. So you guys get what you asked for. I'll go over it. We'll see how long it takes, and I'm sure you guys will have a lot of questions. Schlong. We'll see here. Still 2 minutes. Pushing back, pushing down. I'm just going to have a resting buy order. I'm going to have a resting buy stop right there at 44.5 because my reaction time hasn't been the best. So if we do break up, I don't have to be slow to react. Still a couple minutes. We are starting to sell off. And I was liking 41s, maybe 42 to 40. This zone somewhere down here at the support for a reversal. All right, 1 more minute left. We'll see if a spike in volatility is going to be coming into the market for gold. Starting the sell-off. So maybe looking for a reversal if we do start to drop below into these, 40, 41. Few more seconds. Let's see if we get. Usually there's been an overreaction. 8 p.m. Central. There's no big news event. It's just an 8 p.m. Central. There's been an increase in volatility in gold, and we've been watching it and testing out a strategy and doing some fun analysis, some journaling, and trading it. There's no special event. As you can see, it's now 8 p.m. and you're starting to see an increase in volatility. Gold's starting to move more. So let's watch it. Let's see if we get into a trade. And I am going to switch this to ticks. So we are finding some buyers right at this. This was resistance. So far that resistance is becoming support. 25.43. Yeah, I'm going to keep the buy stop up here because I want to scale in. And if it does give me an entry down here, I will take it. And then if we break out, I'll get into my second as well. Because this was resistance and it looks like it's became support. I didn't get triggered in though. I would really like for us to push down into these 41s, maybe even 40 to get that reversal to the long side. Seeing a lot of hesitation. There's 60 contracts sitting at 44 evens. Not a lot of volatility coming in yet. I do know that when we started watching gold at this time, there was a lot more volatility. Like this trade was much, much better. And that's why we do test a strategy over a longer period of time, because we get to experience all of these different market conditions. Some better, some really not too good. I'm going to go ahead and put a second buy stop right here. See if we really get a good breakout. Of course, the preferred entry would have been down here. So let's go ahead. It just triggered me in one. I'm going to have my stop loss 21 ticks. Either 21 or is that too much? 45 ticks is quite a bit. I'd be risking 450 bucks. My preferred stop loss would be down here. I don't mind getting back in if I'm stopped out. I would be okay if it does stop us out, get back in. Risking about 20, we'll say 19 ticks on this one, keeping a relatively tight stop loss. Because if I get stopped out, I'm okay getting back in rather than risking a full 45 ticks. And then we have the final breakout. Yeah, we'll see. It's going to be interesting to see if we could clear these 45.8. 45.8 would be a good area to clear. Yeah, this was I was a little bit nervous of us hesitating and then coming back down and stopping out. Yeah, I'll do my aggressive stop and normal stop if we do start to break. This will be the normal stop for this one. But I do need to put that in. Let's just go ahead and do that. And I'm going to do it the old way, so sorry. So we're just going to do this as the aggressive stop loss. And my normal stop loss is going to be right there at 25.42. We'll see if we could break out. Hesitating, breaking out. Oh, I might as well just do this now, right? Then we'll just wait for the aggressive stop loss because this will be the normal. And we'll see if we could break out. I'll adjust that because as soon as I get triggered in, the ticks would be like 22, 23 ticks because it'll change my entry price. From 44 and a half, 45, it'd be about 44.8 or something. And we'll see if we can get a breakout to the long side. Kind of hesitating. We are, what are we, just 4 minutes past. What should we do our time stop? So 22 ticks. So there we go. That would be our normal stop. So normal stop, let's go ahead and get an aggressive trailing stop ready. And what should the time stop be? I'm thinking we should do a 15-minute time stop, 15 or 20 minute. Let's do a 20-minute time stop. And I'm going to change the color to white. And so these are just the different scenarios. So 20 minutes after 8 p.m. Central, so 8 to 20 p.m. Central will be the time stop. So wherever we are at this point in time, we will close it. Let's watch this play out now. Let's actually look for take profits because I want to put some take profits in there. Well, we don't really have much to the left to look at. If we could break out the first area of take profit, 25.48. So I would like a 25.48 as a take profit number 1. If we can get up there. So I'm just going to go ahead and put a take profit number 8 or take profit number 1. We'll go first TP. That's kind of a stretch. It's really high up. Okay, so let's go ahead and zoom out. I mean, that seems reasonable to me if we get up into that level. Yep. Take profit number 1. Man, maybe even 47, but we are selling right back off. Let me just see what this one is. This is going to be 30 ticks. To the good. But look, so far we are getting whipsawed. And what a whipsaw is. Ooh, Nasdaq selling off as well. Risking 22 ticks to make 30. So just a 1-to-1 on the first contract. And I think this could be a whipsaw today. Oh, man, this is just ugly. Yeah, we had a liquidity sweep to the long side. Nasdaq selling off. 840s. 840s now. Are we getting the market pullback during slow markets? I mean, if you want to say 15 points is a pullback. Yeah, this is that was not great. So now, I think someone even said it. I'm looking for the long side. Here was the play. And I think I'm going to note this. If I get stopped out here, I'm going to make a note. And I'm going to go ahead and actually just get rid of this because it looks like it's going to get stopped out. So stopped out minus 22 ticks. And I'm going to put the entry. So I'm going to do the entries. And I'm going to make a note because somebody in chat ain't nothing but or what? Sorry about my pronunciation is not good. So this is what we were talking about. And this is what they were talking about, where you wait for the initial reaction and then you take the reversal. So I think this is going to be really good, and we'll see how it plays out tomorrow. So first entry, second entry, and here's what I would want to put. So I'm going to say this, and I'm going to mark this down as first reaction, or we'll just say this, like 8 p.m. Central Time reaction. And then I would say a reversal. And I don't want my chart to get too cluttered, but first entry, second entry, and then I got stopped out. So I think this is the 8 p.m. reaction, and then it reversed, right? And then it just reversed. So I think this is going to be good to note because we talked about it a moment ago. That trader in the chat was saying that the way it's been playing out probably was the best thing, right? So for this example, this is the 8 p.m. reaction. We wait for the reaction and then take the reversal would have been amazing. And I think we've played it out a few times. So yeah, big shout out to them. It's something that has been happening. And look at that trade go, right? So that was the trade tonight. It was not the breakout. Reversals after the initial reaction has been the trade. That has been so much better than the breakout so far. So yeah, look at that. Look at that. 8 p.m. reaction. I'm going to say take the reversal. So there we go. I think, I don't even need a aggressive trailing stop. So that being said, we're going to go ahead and take this. Look at it now. Yeah, so take this, download it. That has been the pattern lately. Go ahead over to the statistics, and we're going to put that as a journal entry, add journal. Add that. Perfect. And save as journal. So then when we go back through this, oh, come on. Then that's a really quick review, right? Where we could go through and tomorrow night, there's two things that we're going to cover. We'll be able to cover the 100 tick chart, and then we're going to be able to cover this. We're going to see if we can get an initial reaction and then take the reversal. And that's what we're trying to do, right? We're trying to understand how to trade this market because the markets change. The way the markets react also change. And so, before when we first started looking at gold, these breakout trades have been really, really good. Lately, these reversal trades are really good. So now the question is, how are we going to know whether the breakout trade or a reversal trade, right? That's going to be a very hard thing to tell is, are we going to be trading a reversal here, or is this going to be a breakout? Is this a liquidity grab, or is this a true breakout? So maybe there's an aspect to that we could try and figure out together, whether it's, if we break out, we wait for it to close, and then we get in. I don't know. It's going to be something we could go through together. It's one of the harder parts of trading, in my opinion, of knowing when to take the breakouts, when to take the reversal. Whether it's time, right? We could very well use time. For example, we noticed at 5-6 minutes after the open, it reversed. So maybe if we get that breakout before 5 minutes, then we take the reversal. Let's pay attention to that. I'm going to be paying attention really close to time, to how the market's reacting, to where we are at. We are getting that sell-off back down to those 40s. And yeah, with hindsight, there wasn't really much to say, let's short this, because we did just run that liquidity and then we reversed. And now we are just starting to sell off, touching those 25-40s. Maybe we get a continuation. Next area I would see us likely getting to would maybe be around these mid-30s, maybe 37 to 36. We do have some support right there at the 37 to 36. But this market, or gold, is starting to sell off now. Yeah, that's quite the sell-off. Man, that was a beautiful reversal trade. $6. $6 in gold. So anyway, that being said, let's go ahead and get to some questions. We'll talk about, see if we could see any slow market trades, and go from there. Oil looking good. Let's take a look at oil. And for slow markets, I use higher time frames. Yeah, very realistic, oil can be a decent trade. So let's do it. Let's set up a slow markets trade for this. Okay, here would be a slow markets concept. This is a little bit different than a buy limit, sell limit. This one's decent. I like it. This is not a signals class. Remember, I did the risk disclosure in the YouTube chat. This is purely an example. So for this example, what I would like is a buy stop. It's saying if we get over this price, for example, this is purely an example, 73.94. So if crude oil rallies and we get above 73.94, then I would like to see a take profit of, say, 73 or 74.53, right up into this area of resistance. So I would look for a nice bounce like this. And my stop loss, if we do break above, I would like my stop loss to be right around, 73. Let's just do, I'm trying to do it for easy math. Let's do 30. Let's do that even number. So that would be a decent 1-to-1 trade. I usually like better risk rewards, like 2-to-1, 3-to-1, but this is a breakout trade waiting as the market's going in your favor. So what this would be, and maybe we could just set this up as purely an example. So let's do that. I'm going to jump over to micros, crude oil micros. And I'm going to set this up. Actually, let me get rid of that analysis on this one. And we're going to jump over to crude oil micros. And I want to set this up. I do like it. It looks really attractive to me. But remember, this is purely an example. This is on an hourly chart. What I would like to do is put a buy stop, saying it will only trigger me into a long if we break above 73.95. We probably get in at 94. Let's get 94. And then I would like my stop loss to be, let's just say 34. I'm just going to do this for easy math. And then a take profit to be 64. So this would be the setup, okay? If the market goes up, it will trigger me into a long. And this could be any time between now and tomorrow afternoon. Once I'm triggered in, it will either hit my stop loss or it will hit my take profit. Or maybe it doesn't even go up. Maybe the market just decides to go sideways or just continues to go down. It will not trigger me into the trade, only if it gets there. If not, I wake up and there was no trigger. So now let's do the math. I would be risking, now these are micros, it's $1 per tick, correct? So I would be risking from 73.34 to 73.94. I would be risking $60, okay? So, however, I'm okay with risking about, let's just say 300. So that would mean I would be okay with a bigger position. So there we go. Oh, that's not what we wanted. It would be this one. Buy stop. There we go. So risking 5, so it'd be $60 if this is my stop loss. So 60 times 5, I would be risking $300 on this trade. My take profit now would be $70, right? $70 per contract, 70 times 5, 350. And so the way to set this up, if I go into my settings and I say my risk, $300, my reward was what? What was the take profit? It was 350. So I'm going to go ahead and click on there. Risk position / profit brackets. Risking 300 to make 350. Save. Go back to my charts, and that is going to be the trade. So buying using a stop market at 73.94. So let me clear this. Let me make sure I set it up again. I'm going to go ahead and put on 5 and 73.94. Buy stop 5. So it's set up, it's ready to go, and we could review how this plays out tomorrow. So what this is saying, once again, once the market goes down, I'm not going to be triggered in. I will only be triggered in between tonight and tomorrow. And if we rally up, it will then trigger me in at 73.94. Once I'm triggered in, it will activate my stop loss at 73.34, and it will activate my take profit at 74.64, and I will be in a long. So now, once I'm triggered in, it will either hit my stop loss, I lose $300, or it will hit my take profit, I will make $350. So I hope that makes sense. This is the type and the style of trading I absolutely love. To me, this is slow markets. This is a slow markets concept. I will turn my computer off. This trade will run overnight while I'm sleeping. And then when I wake up in the morning, I would either be stopped out, not even triggered, or hit my take profit, or somewhere in between. And then I could manage that trade from there. So yeah, that's the slow markets concept. That's as basic and as simple as it gets. And I know it can be more advanced for a lot of traders, but this is it. Like, that is the slow market. That is, oh dang it, I canceled. Let me set that back up. I have a habit of just closing off orders when I see them on my screen. So there we go. It's set up. Do not close it. I gotta make that. So that's it. How are you automatically triggering stop? So in Topstep X, in the settings, you just put what you're willing to risk and what your take profit will be, and it will do it. Now remember, I'm still getting used to the platform as well. So this is not a signals. This is not a signal. Remember, you can follow along in a demo account, get used to placing trades like this. I will always recommend do it in a demo account, do it in a practice account until you get used to it. Trust me, it's this type of trading. If you just put orders on and you leave it overnight, you want to have that confidence that the order is going to be working the way you want them to work. So 1000% practice, practice, practice. Trust me, you guys see, I even make mistakes, especially when learning a new platform. We're humans. We make mistakes. I make mistakes. I've been trading for a very long time. You know, somebody who's new, I could definitely see them making mistakes as well. The last thing I really want is a trader waking up in the morning, you know, maybe they put this incorrect and they're in their XFA or a live account and they end up, you know, doing a lot more harm than good, and it leaves a sour taste in their mouth per se. So that is the idea. Let's go ahead and take a look at Nasdaq. I mean, essentially, I would be willing to do the same thing in the Nasdaq, but the exact opposite. Man, we didn't even get that big of a pullback, right? We went down to 845. Well, was that the pullback? Was that the pullback in Nasdaq? We had a massive sell-off all the way down to 845 and right back up into the 70s. That seems about right. That's been our little average pullback here in the Nasdaq is about 30-40 points before we start on a 100-point rally. But that was a massive pullback on the Nasdaq in this type of a market. But to be honest, I would be willing to do the same thing. So the exact same thing I just did on crude oil, I'm kind of tempted to do that on the Nasdaq. You know what? Let's do it. Let's wait. Let's do that crude oil one first. Remember, it's a demo account. It's just an example. But I would be tempted to do the same thing. And all that is just like putting a sell stop, right? A sell stop where I would get triggered in only if it sells off. Then it will trigger me in, and I'm looking for a continuation. In this type of a market environment, I would look for just the immediately next support, like maybe 800, maybe 780s, 790s, because we did show that resistance here, and we immediately blew through that. So it'd be something like this, and that's if I could get a decent stop loss. My stop loss would of course be the high. That risk reward's not good. That's an upside down risk reward. So maybe something like that. We just made that pivot. So it's like, hey, if we break below 843, then I'm getting a decent 1-to-1, maybe a little bit better 1-to-1 now. I have a decent stop loss and a decent take profit. So maybe something like that. It's hard to say. I'm more comfortable with that oil trade. And that's it. I think that's going to be it for the slow markets concept. Any questions? And there's Hogue in the chat. There's Hogue, probably in your pajamas, right? Enjoying the evening as we're talking about, gold and these other markets. Let's see. Did gold continue to sell off? No, we got that. We got the push down to the 40s, right? So just like we journaled. So if we go to that 1 minute chart, just like we journaled, we had that reversal at the open. We got the push down to those 2540s that we were looking for. And sure enough, we started to bounce off that. So, that could be, you could always go back to your journal. We scroll down here, we click on the journal, and we could always put notes, right? We could put notes. We had that reversal. We could even put, hey, we were looking to get long, 2540s. It worked out pretty well after we got faked out. So being able to put a picture or an image in the journal has been very useful. And you could even do notes as well. That was a beautiful example of buying this support. And then it's another example of the long-term trend just playing its role, right? The trend is your friend, long-term trend that we've been in. The majors trend has been up, up, and up. I'm looking at 2600 to come into play. And actually, let's look at this. Let's take a look at the Topstep daily levels. Let me zoom out. Look at this. Look at that one. So I'm going to take a look at the hourly. So here's the Topstep daily levels, and they've been pretty dang accurate from my own analysis. So we did have it looks like we have two levels right here at 2548 even. So there are two levels right there at 2548. We have a couple levels down here at 37 and 35, and then another one at 35. So we have two down here at 35, and we've been kind of ranging in between here. But I do see this one all the way up here at 2590. That's going to be interesting. If we do break up and start to rally, it's $10 before that key 2600. So I'm going to be curious. If we break up, and if we're going to be talking about this tomorrow or later this week, I would be interested to see how this market reacts. Now, remember, it's not a signal to where we just enter a trade when we get there, but it would be something that when we get to these levels to see how they react. I've been doing that myself, and we've talked about them a little bit tonight. Let's take a look at the Nasdaq now. Do we have any? No, I didn't. I guess I didn't have to redo that. We don't have any daily level. I mean, we just blew through all the daily levels again. So not any daily levels up here. For my own, I would like around this, 960s, 980s. And then, of course, I'm basically 20,000. 20,000 plus or minus 50 points. 20,045 for a nice level, if we could get up there. So those are the two that I'm watching. There's just, the way I look at it, I could sit here and talk and find so many different levels. You can see there's a lot of support around 19,900, and then of course it's a big psychological level, and it looks like there's just a lot of chop around the psychological level of 20,000. You could probably put 10 support and resistance above and below that. Nikkei is going and moving. Let's take a look at Nikkei, and then we'll jump into some trader statistics. Nikkei, the 1 hour chart, not much. We've just kind of consolidated here, right? There's not really much to talk about on Nikkei. We're just kind of hovering around that level. Maybe you're looking for a break up, the traders who are trading Nikkei, but I'm not going to trade it. That being said, now let's take a look at trader statistics. It's pinned to the chat, the YouTube chat. That is my room in the Topstep Discord. If you'd like me to review your statistics, go there. Go ahead and click on the performance stats. Click on share, copy link, and share it to that link in that Discord channel. Let's take a look. Maybe do some questions or put a brief description of your account, and we'll take a look. So give me just a second. Let's see if we can find some good ones. Now remember, the more history that you have, the more days that you have in your account, the better it is and the more likely that I will review it. So here's one of them. Let me go ahead and make sure we have all the statistics in there. Express funded accounts. I love reviewing express funded accounts because they are a step above just regular combines. They have a lot more pressure. It's a more realistic environment in terms of the psychological side. As we're going to be finding out, because guess what? Tomorrow we have Steenbarger coming on to TopstepTV, and I'm going to be there as well. And he's going to be talking a lot about this as well. So that being said, express accounts have a lot more skin in the game because as you're trading express funded accounts, the number one thing that you guys are thinking about, if you're not thinking about it, it's definitely in the back of your mind at some point. You're thinking about a payout. You're thinking about money. You're thinking about making money because the money you do make in an express funded account, you can receive a payout. So that's why I really do love reviewing express funded accounts. It's not traders just, putting trades on, trying to, hit home runs. Hopefully not. And then, there should be a lot less gambling in XFAs. So $500, this trader, this active since July 26th. It has a decent amount of days. I do love seeing traders that have more than just a few weeks worth of data, and we're seeing that here. $500 in about a little less than a month. So that's above positive. Anything above positive in a month is a very, very good thing, especially in an XFA. So right around just above 50%, so 53%, and the risk reward is 1-to-1, a little bit less, and that leaves you with just above a positive expectancy. So a lot of trades, a lot of trading, but you're still positive. Love to see that. I mean, it's not kind of tilted to one or the other. It's very close to 50-50, 1-to-1 on each end, just slightly above. Not really anything that's blaring at me until now, right? There's a lot of trades in a month, 260 trades, almost 500 contracts. I'm going to assume these are micros. Best trade, $700, trading a micro. That's why I'm talking about micros, right? Amazing trade in a micro over, what is that? Over 350 points. Trading in micros. You can make money in micros. I love to see that. Decent, like you see, you started out this XFA, in a loss, you grind it out and you turned it positive. I love to see this. A lot of times traders who start off an express funded account in the negative have a bad habit of sizing up and then just risking too much and then end up blowing it. This is great to see where you're able to grind out of, starting an express funded account in a loss. Scrolling down immediately, the first thing I see is the majority of your losses are coming really quick, and all of these longer trades you are holding are positive. So letting your winners run and cutting your losses short is a very positive note. As we scroll down here, I love seeing this. I like how you didn't trade on a Monday. Maybe you were spending time off. Whatever this day was, you didn't trade. Remember, trading is optional. You do not have to trade. Trading tonight, right around break even. That's great to see. Keeping your losses relatively in line with your daily winning, your winning days. I like to see this, right? You're not letting your winners get out of, turn back into losses. You're calling it a day. You're up $200, $900. And then your losing days is not wiping out 2 or 3 of your winning days. And then micros. Love to see micros. Yeah, lots of trading in micros. I love to see that. It's my favorite thing. And then, by the way, I know you guys reminded me. I am going to be having a conversation with Mick. I know Awesome Hogue spoke on that a little bit because of this. This is a good example, right? This trader, and probably because I'm curious, because that's always on my mind. 500 contracts of micros, right? So 500 contracts of micros traded in a month. So my question in the conversation I'm going to be having with Mick, it's probably going to be after Thursday, is when would it make sense to just trade minis, right? Because I know some of the conversation was like, well, we could just trade 1 mini and then 5 micros or 5 and mix it up. But to me, that's hard because I have to keep switching back to the micro and the mini. And then if I have a trade on the micro and the trade on the mini and switch back and forth, and it could be confusing and it opens up for a lot of human error. Trust me, I know sometimes you mistake, maybe I'm looking at the minis and boom, I'm putting 5 contracts on in the micro or minis, micros. So I don't like to mix micros and minis myself. So I'm very, very curious on how that conversation would be. You are profitable. This is great. But, eventually as you continue on your trading journey, there will be a point of, does it make sense to just switch to a mini rather than put 500 lots worth of volume in micros? I'm always curious about that. I love to see traders more and more trading micros. It's just now the question is, how would you scale up and how would you transition once you are, becoming more profitable, making money, and then instead of putting up 500 thousands of micros, when will it make sense to go minis? So here's another one. Let's take a look at this. Ooh, here's a good one. Here is another Express funded account. Okay. Similar situation. I do like this. These two traders are very similar in terms of the winning trade percent and the risk reward. The winning trade percent is closer to 60 and the risk reward is about 1-to-1. And we're seeing a nice positive equity curve. I like to see there's not a lot of really negative, bad, big days, right? It looks like you're cutting your days pretty short. It looks like a similar situation here too. I'd love to see that. 100 trades, 250 contracts traded. Wow, very similar, right? You started off in a hole and then you were able to grind your way out of it. And man, that's such a good feeling, right? To me, this is so much better to see and go through that where you just don't size up and, immediately blow your account. It looks like you've spent, a good period of time in the negative and you did not let that affect your emotions. That is hard to see. That's rare. This is really rare to see two traders back to back initially being in the negative and taking that time, trading small and getting out of that hole. Beautiful round bell curve, and the losses are to the shorter time frame. So once again, cutting the losses short, letting the winners run. And very similar. I mean, it's very, very similar to the last trader. I got a question, and maybe you guys could let me know in the chat. Is it easier to let your winners run when you're trading micros? Is it easier for you guys to let your winners run trading micros? I'm really curious because I'm seeing that be a very common theme lately. Coach J's yes. A lot of yeses because you're not emotionally attached in terms of it's not really big dollar amount swings, right? Yeah, I'm seeing it more and more, and it's such a positive thing. And so that's why that big question that I ask myself and I've been thinking of is, when would it be right for a trader to scale up? Because when you scale up to minis, you want to keep doing this, right? You want to keep this and these exact same statistics. You want to keep that same emotional connection. Like, hey, it's easier because it's not thinking about money. You can handle those P&L swings. It's not a big deal. And so when you switch from micros to minis, will that have the same effect? So I'm curious, because maybe like account size is going to be a big part of that, right? Account size will be a part of it. Daily P&L will be a part of it. And, traders, it's a lot harder to do this with minis than micros. Okay, let's keep looking at, let's keep going through this. We have about 20 more minutes left of class, and we'll do some Q&A at the end. Love going through all of these. Let's go through one. There's another XFA. 13 days. Let's see. I'm just going through a couple, trying to filter through some of these. Here, a lot of these are the same percent. Oh, I'm curious. Look at this one. I'm curious on looking at this one. Let's see this. This trader express funded account sets the beginning of July. So you have about 20 days in here. Take a look at this. A 10% winning percent, and you're still profitable $600 because you have an amazing risk reward. So let's take a look at this. I'm curious, because this is what I mean. In the extreme risk reward, this could be an extreme example. I'm not sure. I mean, it does have, a decent amount of days in here. So you're losing almost 90% of your trades. You're losing 90% of your trades. That's hard emotionally, but that 10% is completely outweighing your 90%. Looks like you're trading micros as well. So I'm really curious on what this looks like. All right, that one big loss, of course, $1,000 on that one. Yeah, this is one. I don't know. Let's look at this. I was curious about that. Look how fast you're cutting your losses, right? Lots of losses, but you're cutting them all really, really quick. So I'm not really sure what that means. I mean, that's a lot of trades under 15 seconds. Extreme scalping. Let's go through some of this. Not too bad, to be honest. I was curious to see what this would look like. Looking like you're going for $200 a day. Friday, it looks like one trade. So that's not bad, right? One trade, two trades, one trade, four trade. That's what I was kind of talking about on TopstepTV. There's not a lot of trades when you started out this, right? One trade, it was a loss and you called it a day. Two trades, two pretty good trades. You called it a day. So I love seeing this. You're not trading a lot and you're calling it a day after, not very many trades. It's very good to see. But then for some reason on the 15th and the 16th, you have 124 trades. So it looks like you started down and you kept trading and trading and trading until you got into the positive. So I'm curious to see why. Usually you see traders who, this is a very, very positive thing when you only place, 2, 3, 4 trades a day and then call it a day, and you have that discipline to lock yourself out and be done. And then for some reason, these 2 days, 127 trades, 124 trades, you're already into 23 trades tonight. And there are micros, so that's given. Maybe you're scaling in and scaling out using micros when these 2-to-1 trades were minis, right? So there's a difference there. These, smaller, that's micros as well. Interesting. That is very interesting. I'm really curious now on maybe a month from now, 2 months from now, on how this trade win percent works out for you as a trader and how this risk reward works out, because this is a great risk reward. Interesting trade percentage. I'll be curious in a month from now if you're still in an express funded account or a live account, if this holds true, if this risk reward holds true, and if this trade win percentage holds true. That is an extreme example of how crucial a risk reward is and why one is not independent of the other. You can't have one without the other. Could you imagine if your trade percentage goes up to like 15%? You're almost doubling your profits. Like a small percent boost in this will make a dramatic difference in your profit factor. I'm curious. I'm very interested. I don't see a lot of statistics like this where it's on this extreme example. Usually it's the other way around. Usually you see a 90% win trade percentage and then like a 1 to 4 upside down or 1 to 5 upside down risk reward. Usually it's the opposite because emotionally this is hard to do. So anyway, that being said, let's do some Q&A and then we'll finish it up with that. And I think we could call it an evening after we do a few more Q&A. Nasdaq is just buy. Look at this. We didn't even get any type of a pullback. I mean that was it, right? We had a little bit of pullback down to the 40s and then straight back up 40 points. Boom. Already pushing new session highs. That was it. Wow. Such an interesting evening. Okay, give me a second. Let's get through some of this. What is a psychological level? Psychological level. It's any level that is a big round number. So, for example, over here on the Nasdaq, $20,000 is a very key psychological levels. Some say the more zeros you have, the bigger the psychological level. This one has 20,000. So you can imagine, count them, 1, 2, 3, 4. So that is a big round psychological number. Then as you start to zoom in, every $100, right? So 19,900 could be a psychological level. 19,800 could be a psychological level. But usually 20,000, 21,000, 22,000 are very big psychological numbers. And humans, yeah, I mean, it's very, and it goes with any market, right? If we take a look at gold, let's take a look at this. We could zoom out and we could see 2,500 right here. Let's highlight that, 2,500. And it's a psychological number, right? Where we broke above it, it kind of held as support. We broke down, it held as resistance. Then the next level is very possibly maybe 2,600. And then you have the, intermediate psychological levels. So as you can imagine, and if we grow, like if we ever went all the way back, so if we go to like a daily, you can imagine $2,000 an ounce right here in gold was a big psychological level where we went up, touched it, sold off, touched it, sold off, touched it, sold off. When we broke out, finally, we came back, tested it. $2,000 per ounce on gold was a big one. So those are psychological levels, like very simple, big round numbers that we like to test. That's it. Nasdaq just continues to amaze me. We're going for nine green days in a row right now. I really did think we was going to have a pullback. It looked like it for a moment, but just buy. That's just crazy during slow markets. Wow. That shows you it's the market could always be, what is it? Irrational longer than you could be solvent, whatever that thing is. How do we join Discord? Andrew, would you be able to put our Discord link in there for them to join? Dakota, do you like counter trend trading, 0 TFD on daily and 4 hour? Not really. The way I like to trade is the way you see me trading tonight. I love trading the way you see me trading tonight. The market's been very difficult. It really has. It is difficult because we had that huge sell-off and that volatility, and we are in a difficult market again because it's the summer, it's low volume, and it's just been another just grind higher. Like, we did get a pullback the other night, which it was a great buying opportunity. But yeah, it's just, again, 8 going on 9 green positive days in a row here on the Nasdaq is just, it's something to, all you do is just say, man, I wish I would have bought that dip when everyone was panicking and selling off a couple weeks ago, and just watch and be entertained. Grab your popcorn and say, hey, this market's not stopping. We're just going up and up. Tomorrow, if I wake up and we're at 20,000, I wouldn't be surprised if we're at 20,000 tomorrow when I open my eyes. Just close your eyes and buy. This is just pure entertainment. It really is. Just 8 solid winning days going on to the 9th. And these are not even small winning days. Like, maybe I would suspect, like, okay, if we made 50 points in a day, or if we go to the daily chart, more of these smaller green candles would make sense to me. Like, okay, you know what? Look, if we zoom in and we could say something like this, look at this. And then the media is like, oh my gosh, we had 1, 2, 3, 4, 5, 6, 7, 8 winning days in a row. Right there. 1, 2, 3, 4, 5, 6, 7, 8. 8 winning days in a row. All right, that would make sense to me if something like that, or this one, right? But this is not just any 8 days. These are 8 very, very bullish days where we've pushed up, almost 2,000 points, 2,500 points from the bottom, or 2,000 points from the bottom of this move. And so you can't really say this is a normal market. And so 8 really strong green winning days. DNC. What's DNC? I have no idea what DNC is. I DNC. That's a political thing. I'm probably not. Yeah, Democrat National Convention. I'm not sure. I do my best to stay out of politics, even though this is the time of year. It's election. We're going into the fall, and it's hard to go away when every social media outlet is covering political news, and so maybe that does affect the markets when it's there's a lot of politics going on. We have Jackson Hole coming up, and with the uncertainty, it's still just crazy that we're just going up. So that being said, I think that's where I'm going to leave it off for you guys. Stay tuned. Remember, Dee's doing her London session. We have Coach Jay doing at the buzzer after the close during the afternoon in New York session. And then Nick for a tick on Sunday afternoons. And of course, yours truly doing slow markets. So until then, I will see you guys bright and early in the morning for fast markets. I'm going to be trading with my trading buddy. Hopefully we get better markets. Maybe we even get a pullback and find some more amazing house account trades. It was a good day for the house account. Love to see that. So until then, take care.